Only buy and hold something you would be perfectly happy to hold if the market shut down for 10 years. That's Warren Buffett, and Mr. Buffett makes an outstanding point. Buy and hold strategies typically are exactly the wrong thing to do. And when are the most wrong thing to do? When you can actually read a stock chart that we teach here every single day. When we look at something as simple as the S&P 500 chart, would you want to hold on to the S&P when it rotated over going down back in early October of last year, somewhere at about the $290 mark, and keep it all the way to the bottom at $233? Why do that? If you can see a chart and it rolls over, you get out, you wait till it bottoms out, and then you jump back in, saving yourself tens of thousands, millions of dollars, depending on how much of the SPY ETF you own, and then get back in a lower price and ride it back up. Buy and hold strategies. If you can't read a chart, maybe that's something you're willing to accept, losing lots of your money whenever the market goes down, and then hopefully it recovers. But why do that? That's what we train here. We ask you those big questions day in and day out. And I know that's why so many of you are here. And of course, in the next 12 to 24 months, if not sooner, there is going to be a real moment of crisis when this market finally rolls over and starts going down. May very well have a summer low, many times we do. And when this market rolls over, are you going to be the person that's standing there losing your backside? When the market crashes, I'm talking a systemic crash like we had back in 2008, and that's easy to see on our charts. We just go to our quarterly chart. We go back to 2008. Amazing. Our quarterly chart also shows a crossover when you could have gotten out of the market and not ridden it down hundreds of dollars. Don't have to do that. Literally losing potentially thousands or millions of dollars, extending out when you would have retirement choice. Instead, how about getting out, letting the market go down and buy back in inexpensively and then ride it up until it happens again? That's what we're talking about. And we get even a little more sophisticated when we start talking about other options. When the stock market crashes, does gold offer opportunities to get into? Do bonds offer opportunities? Do you have inverse funds that you could get in for weeks, months, or longer? There are all sorts of opportunities if you develop the mentality and the skill set. That's what we're teaching here every single day. The market is open and we're jumping into it right now. What do we see going on? We see the S&P 500 up a little bit for the day, 0.05%. The Qs, Nasdaq 100 down. We see bonds and gold up. Let's take a look at the S&P 500 price movement on the weekly candle. Now we're only 2 days in to a 5-day candle, so you don't start calling candles until they're drawn, as we say over and over. Sometimes folks forget that. They forget that a lot, so I mention it a lot. The derivative oscillator is gaining upward momentum. Price percent oscillator still heading up, not as strong as it had been the week before. Price movement is above where it was the prior week, and like we said, above the 2-day. And the weekly, we go from the weekly to the 2-day. Remember, always start with your large chart, work your way down. On the 2-day, we look at that and we don't see price movement moving above where it had been on our Heikin Ashi candlesticks for the prior 2-day candle. It ended on Monday. This is just the first day of the latest 2-day candle. It's nice to see price movements above both the 2-day and the weekly. We look at the price percent oscillator and it appears to be just dead flat at this point. Derivative oscillator losing some energy. We look at the 4-hour chart. What do we see there? Well, we told you with that little crossover, we didn't have a lot of faith in that. Said look at it in the morning. Well, in the morning, of course, it was down. And of course, the Heikin Ashi candlestick in the morning was down. Recovered a little in the afternoon, rotated over, going down. So again, things are really slipping sideways here with that 2-day chart weak. Remember, once we do a buy-in point, once we find a jumping in point on our 4-hour chart, we then revert over to the 2-day. We use all the charts all the time in making decisions. Our problem was, as weak as that 2-day was, with that crossover yesterday, didn't make us feel good about it, didn't recommend it. And of course, we were right. Market's just really slipping sideways right now. Has it topped off? Could be. It could be topped off. So we'll continue to watch, see what we see. If this thing crosses over strong, 2-day chart gets stronger, maybe we would feel better about things. Don't feel real good about it right now. So we'll continue to watch these charts and see what we see as the week develops. Remember that 2-day candle is only the first day of the latest one. We're going to go to the Qs now. Down 0.77% for the day. Going into our 5th week of up movement, price. Now again, we look at the top of the wick on last week and so far this week, and not quite pushing up as high as it had before. That's reflected in the price percent oscillator not going up at the same angle it had been over the prior weeks. We had about 3 weeks of just nice strong up movement. Derivative oscillators also lost energy. Prices above the weekly trend line, but weakening. And we look at the 2-day chart, and that's where we really see it. We see where things topped out back on the 2-day candle ending Thursday the 25th. Then we have a red spinning top warning telling you, hey, indecision tending down. And what do we see now? We see that 2-day price percent oscillator rotating over, heading down at this point. And we see a big drop in the derivative oscillator. We see price laying right there on the 2-day trend line. So again, that's a bit of a problem, and still above the weekly, but things are weakening significantly. Now, it's just the first day of the latest 2-day candle. We're not calling any crossovers or anything else, but weak. What do we see? Well, it was that big down movement in the morning, bit of a recovery in the afternoon. We see how the price percent oscillator pulled way away from the signal line after that morning down movement. Derivative oscillator flipped over, going all the way back to the afternoon of Friday, the 26th of April. So again, we see that move strengthening and increasing. Now, as we've said, we had our jumping in point way back on the 1st of October, somewhere around the 180 something mark, 180, 181 we'll say. And again, price has gone up quite nicely for us. Ended the day 189.54, as high as 190, 132, somewhere in there. So we've had great price appreciation. With the weakness, you can always make a decision to take your profit at any point. Typically, what we're doing is we are looking for good increases and making good decisions. Now, with the market having moved so high, we are, when you go back in time and you're trying to look for points to pull the plug, well, when you go higher than you've been before, again, looking for resistance, you've got to actually start using what we do routinely, and that is using your price percent oscillator, using your trend lines, using your derivative oscillator to show you that energy is decreasing significantly. So again, doesn't hurt to take your profit, pull out, and if that 4-hour chart crosses back over going up, then of course you can always get back in. But we have done so well in this trade, going on now going into the 4th week of it. It has done very, very well for us in a practice trade. Very proud of the movement that we have captured. So again, keep your eye close on things. That 2-day chart is weakening significantly, which gives us some concerns. Weekly's also weakening. Doesn't mean the end is its run, but it does mean that we're getting a lot of signal lines. Now, signal problems. Now, let's move to 20-year bonds. What do we see going on there? We see a real sideways slide tending up on that weekly chart, still in a confirmed up move, which is interesting. It's just the first 2 days of a 5-day candle. As we said, derivative oscillator, however, has already switched over to the negative. That can change. All this can change before the week is out. We thought we were going to have a crossover last week and see how far away the blue signal line is, the blue price percent oscillator line is from the red signal line. So we'll continue to keep our eye on things. We go from the weekly to the 2-day, and of course it is negative and has been negative since it crossed over way back on the 11th of March. And it was up for 4 days, and this latest day is a red spinning top tending down. So that's telling you price movements, indecision tending down, still confirmed down, derivative oscillator losing downward momentum, price percent oscillators heading up. We're just going to have to wait to see how TLT sorts itself out. Little up movement in the morning with more up movement in the afternoon, like we said, up 0.51%. Price percent oscillator moving away from the red signal line in a confirmed up move. Derivative oscillator still losing momentum. So we'll watch and see what we have to see. We go, and again, no trade there in bonds. What's up with gold? Well, had a weekly vertical crossover on gold back on the week ending the 29th of March. Gold has done quite well for us since that time period as far as down moves go. And again, being able to track indices up and down is extremely important. Why? Because they're inverse opportunities, they're option opportunities such as puts, where you can jump into down trades. Those are always very, very helpful, and we're very interested in those things. So we see that we had a strong week of down movement following the weekly vertical crossover, sideways slide, indecision the next week ending the 12th of April, then a big down week the 18th, week ending the 18th of April, and that of course ended early because of Good Friday, so that ended on a Thursday. And then the prior week ending the 26th, Friday the 26th, was a down week. And then we have so far this week a green spinning top, indecision tending up, derivative oscillators losing some momentum, but that price percent oscillator still heading down nicely. We look at the 2-day. That's where we see a real pullback underway and really flattening out right around that mark of 120 or so. I mean, hit a low down into 119.50, but is now up about $1.50. We saw up movement in the morning, bit of a pullback in the afternoon, bit of a weakening in the afternoon. Again, up 0.31% derivative oscillator, losing downward momentum. That price percent oscillator on the 2-day chart heading up, won't call anything on the 2-day chart until, of course, that closes the end of the day on Wednesday. What do we see going on the 4-hour chart? We'd had a down day on the 29th, and of course, last day of the month up, but not up, recovering all the way through where that down move started. Don't forget, on Friday, we'd hit a high of 121.67. So again, closed for the day 121.20. So keep your eye on gold. If you're in that inverse move, there's some telltale warning signs as far as that 2-day chart goes. Weekly still looks good. Let's see particularly how that 2-day chart looks at the close of the candle on Wednesday. Folks, that's where we are as we end the day on Tuesday. Go into the new month, the 1st of May, tomorrow. We so appreciate you being with us. We hope that you are putting to use the 10 to 15 minutes you spend with us every day in the best way possible. That is following these charts, thinking about these things, tracking these things, trading, doing practice trades with us. Again, we're not a stock calling service. We're an education firm, and we want you to practice trade with us till you get good at this. Otherwise, you start using real money and are not good at this and start losing real money, you won't stay. This won't work for you. You will end up exhausting your money, exhausting yourself, your nerves, your emotions, and you will cave in as a loser, sort of like people do who go to Vegas and lose all their money and don't ever want to go back. Well, we don't want that to be the way you feel, because the stock market is not gambling. In fact, the stock market is pitting yourself against the market, but not in a gambling way. We follow trends. We work very hard to find them, to track them, to follow them. And those of you who've been with us over months or years, you know how accurate this method can be if you learn it and you use it right. Practice, practice, practice. That's how you get to Carnegie Hall, and that's how you become a stock charting master and create your own money printing press. That's what we want to have for you. We want you to not only be ready for the market crash when it comes, and the opportunities are going to be amazing. You're going to be able to see what's happening live time as it happens. There's blood in the streets, people on fire, throwing themselves off buildings, and I'm hoping none of that actually happens. But we're just playing with words right now. But it will be crazy, and we want you to be ready to be able to take advantage of the opportunities that present themselves. It is those of you who have real money traded before, you know that some of the easiest times when you know what you're doing to make money is actually when the market is going down. And we want you to practice that and to be ready for it when it happens for real. That's what we're all about here. 10 minutes, 15 minutes a day is all we ask. Make sure, if you haven't purchased our book, do that. You can see a link in the show notes. We'll provide you a copy of that wherever you are in the world. Follow the link in the show notes. If you live in the United States, you can purchase it right there at our Square page. It'll take you to it. If you are in other parts of the world outside the continental United States, well, we also ship to all the islands and everything that are U.S. protectorates. But if you're in a foreign country, even Canada, apparently Square won't let you use your credit card there. Just email us, cw@chartingwealth.com. I'll send you an invoice. You can buy your book, and I'll ship it to you wherever in the world you live. We've sent out hundreds of them, and we will be happy to send you an autographed copy too. You want to be a Patreon supporter, we'd appreciate that also. We are working on right now a in-depth training course that we are going to be offering in the near future. I want you to get excited about it, and I'll be telling you more about that as we go forward over the next few days. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.